Before we start the panel, I also would like to convey heartfelt condolences to those who lost their lives in yesterday's attack and quick recovery for those injuries. I hope that this will be one day over and the whole human being will be in peace. That's a wish as a normal human being from my side. Now, coming back to our panel today, you have heard all through the conference during different panels that actually Eurasia region have a lot of growth potential, but together with this growth potential, a lot of challenges accompanied with it. So, and it is an emerging region. There are strengths of each of the countries in the region, but at the same time, there are a number of challenges that they need to deal with it. It is one of the fast-growing regions, as also in the previous panel, one of our panelists mentioned. According to EBRD forecasts, it is expected that the growth potential in the region will be above 5%. And as you know, to hear any growth rate above 5% is very difficult in nowadays world, due to dealing with the inflation and a number of challenges accompanied with it. So what I would like to today discuss is how our financing world may help for to, in a way, catalyze the regional growth and support for the development of the whole region in a harmony. And that's why I have very esteemed representatives from different financing institutions today. Without taking too long time, knowing that we are behind the schedule, I'd like to quickly start with my first question, and this is to Roman. And you are being from Black Sea Trade Development Bank, and actually one of the very important IFIs financing the region at the moment. And I'd like to ask you, what sectors you think are the most critical and most interesting for your institution for the financing in the region?
Thank you, Şule. Good afternoon, everyone. I'd like to also share our condolences as an institution and myself to all the people that were affected with the tragedies yesterday. As we were talking in the earlier panel, peace and stability is the key importance for everything. So we hope for that to return. And thank you for the invitation. With regards to the region, peace and stability is first and foremost. And once that is there, then we can start looking at development and what is needed. We've talked about earlier in terms of infrastructure needs. It's not just transport, it's digital, it's energy. And some of these important hubs that are being developed, different routes, not just for transport of goods, but in terms of electricity, green electricity coming through, back and forth through this region, the Eurasian region, is extremely important. And this is where multilateral institutions like our own, we're here to help catalyze that and help it grow, because we're ready to take on those early risks that are needed to be taken on, and to help engage the private sector into the long-term lending. It wasn't long ago that Turkey or other countries started gaining traction in terms of renewables, and it was the multilaterals that were helping them. So this is what we're focused on a lot in terms of energy infrastructure in the region.
Thank you. Thank you very much. Yes, exactly. And especially to be aligned with the Paris Agreement and to reach the targets that agreed by all nations in the Paris Agreement. We know that there is a need of $4 trillion in financing for the whole globe. And of course, quite a portion is also necessary for our region. And that's why, as IFIs like Black Sea Trade, EBRD, and other IFIs, it would not be enough to meet all the financing needs just with this IFI sources. And there is a need for diversification of the financing sources? And then my question to Jason is, can you a little bit elaborate to us how you think the financing sources can be diversified, and especially to reduce the reliance on single source of financing, and what kind of tools those could be?
Thank you, Şule, and thank you for AmCham Turkey for hosting this event. As well, I express my condolences to all of Turkey, geçmiş olsun, regarding the terrorist attack yesterday. Coming to your question, so as a banker covering the Eurasian region, we actually spend the vast majority of our time trying to solve this problem for our clients, which are governments, corporations, and financial institutions in the region. Indeed, having more than one or several options for sources of financing is prudent from several aspects. As a borrower, you would not want to only have one choice, right? So we see in the, I'm talking about external financing options, not internal. So for external financing options, we can summarize this as mainly two markets, and there's many subsegments of those markets. One would be the loan market, and within this we have what you would call the bank loan market or the unsecured loan market. Here the main lenders are commercial banks. They generally are providing financing under term loan facilities to financial institutions and corporations. To governments it's less common, but it can still occur. As well, you have another sub-segment of that, which yourself at EBRD I'm sure would be very familiar with, is DFI, IFI-backed loan financing. And as well, we can mention their export credit agency-backed financing. So this is I would say, one segment extremely important. The other that we've seen develop very rapidly and in quite large volume here in Turkey and in the wider region is the bond market for offshore bonds, which what we call Euro bonds. If you look at the size of this market in terms of the depth or the amount of financing available or potential financing available, this would likely be the deepest market out there for a source of financing. And this can be structured to attract investors from Europe, the US, depending on the different formats used. But as a borrower, be it a sovereign or a corporation or a financial institution in any country in the region, there's certain criteria that needs to be met and developed on over time. So, well, I mean, maybe not to boast, as I've been here for so long and I feel a little bit Turkish for being in the country for so long, but Turkey is quite, I would say, the regional leader in this, let's call it debt financing space, as the borrowers from the country have spent 20 plus years of building these relationships with banks and bond investors. And you could see from the performance this year, where there's been over 30, if not more, bond issuances from issuers out of Turkey. There's quite a lot of demand. But we see other countries in the region as well have a strong development in this. Others are, maybe I would say, just starting. But a few, such as, for example, Georgia, Azerbaijan, and Uzbekistan over the past several years have become a lot more active in this space, allowing them to have multiple sources of financing. And the outcome of that generally is to bring down the cost of financing for the borrower. But as well, in some, let's call them mega projects, it allows them to be financed. Because if you didn't have all these options, those mega projects probably could not be completed. You know, we saw maybe about 6 years ago now a mega project like that done here in Turkey with the Southern Gas Corridor and TANAP being built. I think that's a great example where financing sources were used from ECAs, IFIs, and the Eurobond market as well, because the need was so high. But what we're recommending our clients to do is establish a process of having, you know, a strong transparency, and by that we mean quarterly or semi-annual financial reporting in IFRS standards, having their own investor presentations and regular presentations to investors, keeping them updated, and having external credit rating agency reports. These are all areas that help them to tap more sources of financing.
Thank you. Yeah, in a way, the region and countries in the region are somehow emerging in their nature. And when it comes to capital markets, I need to say probably the deepness is not there yet. Even in Turkey, we are, as one of the more developed capital markets, there is a big challenge still to raise, especially if the amounts are increasing. And for the capital markets, of course, stability, foreseeability, very important. And due to all geopolitical developments, unfortunately, happening, of course, that's being a shadow for the capital markets. But I fully agree with you that for future and for the sustainable growth of the countries, capital markets will need to be there and definitely will play a very important role. And especially now with the green agenda, as you know, there are many climate funds, many climate-focused investors who are just dumping their funding into the green funds in order those to be invested in the greening of the economy. So that's why I'm hoping that we will see more active development of the capital markets as an alternative financing tool in addition to our IFI world, commercial banking world, and ECA world, because the investment needs are huge. Then I want to go back to Oybek. And actually, first I would like to ask, who is Mosaic Insurance?
Yeah.
And I would like to also ask you the role of insurance companies to bring all these various financing sources together, or in a way catalyze the financing to reach to our region and our countries in the region.
Thank you, Şule. I think it's, again, I would like to repeat condolences to everybody who suffered and in Ankara bombing attack. But again, my job is insurance, and we can at least reduce fears and financial outcomes by providing insurance protection. I heard today many different, we can do our countries better, etc. But my job, since we have established, has been trying to be together with Turkish insurance market, trying to be together with Central Asia. Just as an example, the company I found 3 years ago was established in Uzbekistan with 100% American capital by investors called Mosaic Financial. And we were so successful that the group even decided to rebrand into Mosaic Insurance Group. We've been growing 6 times every year in the last 3 years, but the growth is not individual growth of one country. We've been growing because we were established as a regional company. I'm offering direct insurance and risk management services in the region, but we very much rely on our partners. And what has been the most important, especially with the support, right after the pandemic, it coincided that I've been coming to, most of us were nothing to do, so we were not busy. So I was coming here and trying to find a ways, how can we collaborate, how can we support each other in the region? And lucky having so many friends, being an ex-AIG, I have so many friends here in Istanbul, so we started discussions with Turkish Insurance Association, which is not surprisingly been cooperating, and they had a very successful cooperation only with one country, Azerbaijan. So I brought in a loop Uzbekistan, Kazakhstan, Kyrgyzstan, and Tajikistan. And now we have established a union of insurance associations of Turkic countries. We have already been having our own events, but it's growing. We see that the world is interested, and we just got an invitation. I'm sorry I was late today because I was spending a week in Europe, and we had many discussions of collaboration between the insurance industry. But the rest of the world is jealous. They think that we have a great success stories. We have, and you all know, I mean, that's true, countries with the highest GDPs. We're seeing it's rare opportunity when the small is always growing faster than the large. So that's why our economies now probably have the fastest growth opportunities. So we're now trying to attract, as a group of Turkic nations, we're now trying to attract the rest of the world to participate more actively in order to provide capacity. We all know terrorism is one of the things. We're also seeing, now we're forgetting, but I think it's the healthcare is another big issue. Everybody just a few years ago, we were worried about COVID, but it hasn't gone away. I mean, in fact, we see more and more people worried about their needs on the healthcare and support, which we can get. The climate change is bringing more of the other risks, and we see what, as an insurance professionals, we used to say earthquake is the most dangerous thing, but now we see what we call is the common events, which were not considered as a catastrophic events, the floods, they becoming having a catastrophic events. So we're trying to go from just exchange of information and setting up the unions to immediate steps and the concrete steps, first of all, for harmonization of our industries. One of the good initiatives, especially in our Turkic world, you know that we even now trying to harmonize the language using the same alphabet. So I think it's just one example, but we need to harmonize legislations. And it goes both not only to the insurance industry, it goes very much into the capital markets. I mean, probably not immediately, but later I'll tell you how there's a fourth hat I had by also being a member of the Tashkent Republican Stock Exchange, Uzbekistan. And I think it's one of the biggest advantages so far for us have been that having a common roots, having a very good understanding, having a culture which is very much similar, the languages are similar, and as a group we can grow much faster. And even for the group, usually when we talk, we say like we have this unique opportunity, and we can really benefit on this opportunity, first of all, because we trust each other, because we work very closely with each other, so we can benefit first ourselves, and then we can also invite others to benefit from our success.
Thank you. Thank you very much. If I go to the second round of our panel, and Roman, my question to you, what do you think, what kind of innovative products, financing products we may have, especially to mitigate the risks associated with the market volatility and economic uncertainty, especially considering the situation we have in our region?
Yes, thank you. Our region is not the most stable, let's be honest, but I think there are, you know, seeing this event today, seeing some of the discussions earlier today, there's a lot of focus on building that stability. I think that's first and foremost. And if you're looking at any project, you know, what is the makeup of the risk? You know, risk, as someone said earlier, it's all about cost of capital, and you're trying to bring it down as low as possible. So what are some of those elements of the risks? I mean, first and foremost is political or regulatory risk. And that's anywhere from like 40 to 70% of looking at the cost. So if you can bring that down, and that's where all of the focus was in the early parts of today's sessions, that is first and foremost. Finance comes up much later, because then you're looking at the project itself or technical risk. But then, you know, you're looking at the financial. That's maybe about 10 to 20% of all the risk of mitigating a project. And then in there, you know, yes, there are some innovative things beyond long-term lending, which, you know, the bilateral, the multilaterals like ourselves, EBRD, or us much smaller and but more regional, you know, Black Sea Trade and Development Bank, we are focused on providing long-term financing where sometimes it's not available. In certain of our countries, you won't get long-term financing, but you can get medium-term, something like that. We'll provide longer-term. Or when regulatory changes happen. For example, in Romania years ago when they changed the regulatory environment for renewable energy, no one was ready to take the first step. A lot of the multilaterals, we came in first, started financing some of the early projects. So we are ready to take not just the longer term, but the initial risks, because we're there for the long term. But then there are also various products that one can look at beyond just providing loans. There's guarantees. And guarantees are very important that help to eliminate risks. That has been done by EBRD very successfully here in Turkey, and some bringing down the rating of a project, making it, bringing it up, bringing down the risk and up the rating of a project be above the Turkish limit because of the support from the multilaterals. These kind of things are extremely important. And then what else can we do? And there is the capital markets, as Jason mentioned earlier, is important. That we can help catalyze those things. Many times, our institutions as development banks, we help anchor certain bond issues where they're the first time to market. A client, a country, or so forth will help anchor and provide support and get involved in a primary transaction. So help bring down the risk and bring up the interest from investors, not just the private capital that may be there or may be risk averse. When you get multilaterals involved, it helps bring it down. So this is the role of ourselves as multilaterals. There are various products from guaranteeing to other hedging type arrangements. And this is what the role is of some of these development banks.
Thank you, Raymond. And actually, before I move to Jason, because I'm going to ask you a very different question, I want to move to Oybek and ask, considering all these challenges, and especially when it comes to capital markets, of course, this is even more difficult.
Yes.
What do you think the challenges and opportunities in the capital markets when you consider our region, and whether, like old times, insurance can play again a role with the wrapping and the different tools to come over some of the challenges?
Yes, definitely. I think first of all, it's like when you take the example of the insurance industry, everybody is pulling around the strongest. So in the capital markets right now, one of the biggest issues we have is a big difference of a developed, for example, Turkish, Greece markets, where you have a well-established environment with the younger economies of Uzbekistan, Kazakhstan, Kyrgyzstan, Tajikistan, where we all, like I said before, everybody sees a great potential for the highest growth because we're still small countries. But the environment is not yet ready. In some countries, in Uzbekistan, I just wanted to add, 3 other hats. I'm also Stock Exchange, member of the board of directors of Stock Exchange, and I have a right to say that we do not have the right regulation. Just give you an example. In 2019, first time ever, the new government established the Capital Markets Association as a regulator. Then in 2020, they have changed the regulator to the Minister of Finance. In 2021, they've changed to mega regulator. In 2023, they've changed back to another regulator, which means like everybody is confused. Like it seems like every year we're changing the regulator. It's a feature of fastest growing young economies. When we look at our governments, we don't blame them. I think they're doing it for good, but sometimes that good is bad because it's too many changes at short time. And that's one of the things we always, as a businesses, of course, maybe the government's opinion would be different, but as a businesses, we would like to learn from a better developed countries and learn on the best practices. In order to improve capacity in our region, it would be good if we help the smaller countries as well, because we are growing. We have our own capital as well, but we need to get harmonization of the laws. And again, another reason, for us to worry, in Uzbekistan, we don't even have the capital markets law. And that prohibits, I mean, it doesn't prohibit, but it makes it very difficult for us to use different instruments which could have been used. Like we cannot use asset-backed securities, we cannot use mutual funds because there is no law. So, and that's why I repeat in our own discussions when we're having, first of all, we have a very strong group of AmChams. We conduct all the different discussions, at least for our own countries, to harmonize, to help each other, to learn on the best practice. And then we could definitely add value. I mean, smaller countries can add value to the larger countries.
Thank you. Thank you. And my final question goes to Jason. I mean, as Citibank, of course, you are very pioneer in developing a number of new products, and you are already implementing them very successfully in the developed countries. But probably that's a little bit of a more of a challenge when it comes to our region, considering it is in its emerging nature. Would you give us some examples of these alternative tools like sustainability bonds, impact funding, green bonds, and those kind of tools which are used? And do you think those products could be also successfully used in our region?
Thank you. Yes, over the past several years, we've seen the market for green and sustainable backed or linked financings increase dramatically. When we look at the structure is the same as what I discussed earlier. So these formats can be in loan format, in DFI, IFI backed loan format, or in bond format. What it is the borrower is allocating a certain use of proceeds to go towards financing green or sustainable projects. So what we've seen is borrowers have a demand to, one, attract more sources of financing and higher demand for that. And also they have a demand on their side to finance green and sustainable projects as part of their own strategy to meet sustainable goals. And on the other side of that, the lenders or the investors as well are looking to allocate capital towards such projects. So in general, it's like a win-win scenario when you can structure a transaction like this. The diversity for financing such projects under these what we call labels is quite broad, and it keeps expanding. So yes, there is a lot of innovation in this space. I could give, the original examples were green-backed, right? So this was related generally to the environment and linking it to green transition type of projects. Over the past several years, we've seen sustainability as well become let's say, regularly used type of use of proceeds. And what that is that can be examples of financing education projects, healthcare projects, vocational training projects, things on the more social aspect of it. And talking about innovation, we're starting to see, and correct me if I'm wrong, perhaps your bank was involved, but there's a new space, what is called blue bonds, and we've seen that start to pick up lately, and that's mainly for financing marine or waterways to make it more environmentally friendly, etc. And almost the sky is the limit in this space. There's been several bond issuances by IFIs for very specific projects, like in Africa, they did a rhino conservation linked bond. I think it was World Bank's bond. So the scope is broad. I think an important thing to note is many times these projects are relatively smaller. So those projects in the normal capital markets would be difficult to finance on their own. Right? And we're talking maybe 5 million, 10 million, 20 million maximum type projects. So the market has moved or developed, whereas we're seeing commercial banks in a specific country, they have their own clients who are doing green or sustainable projects, and they portfolio or take a broader, let's say, sample of projects, and investors, whether they be bank investors or bond investors, are financing the commercial bank to on-lend to green and sustainable projects. This has become, I think, a very efficient way to finance a broader scale of projects that previously either couldn't be financed under green format or it would be more expensive to do so. And we have many recent examples here in Turkey, as well in Uzbekistan. We closed 2 recent transactions with banks this year, one under the green label and the other under the sustainable label.
Thank you. And from that point of view, I think financial institutions and banking market will still play a very key role, at least to be a kind of bridge between the end user of the financing and the capital market investors for some time, at least in our region. And of course, one thing for our governmental representatives here, to make all these tools be able to use in these countries, as Oybek also mentioned, you need to have a stable regulator system, because otherwise, in the dark, no investor would get into that market. So that's why guidelines, certain regulations, and this kind of governmental support is very necessary in order to make this financing, alternative financing tools to be used in our region, and a lot of homework for our governmental representatives from that point of view. Of course, as Black Sea Trade and as EBRD, through our policy dialogues, we are trying to give support to them on that side as well, to develop the regulatory side in order to our commercial banks like Citibank or the insurance players to come to the market and provide financing. So thank you very much here. Knowing we are behind the agenda, I would like to cut off here, and I would like to thank you for our panelists for being with me here. Thank you to AmCham.
Thank you.